Welcome back to the Neuro Finance Masterclass. I'm absolutely thrilled you're tuning in today because, honestly, we're stepping into what is arguably the most critical phase of your entire financial education. Today's massive theme, the tax shield and corporate structures. This is all about how you legally protect that wealth you're working so incredibly hard to build. We're going to take some high finance concepts and make them completely accessible, highly structured, and most importantly, totally actionable for you. Here is the syllabus for today's explainer. First up, we're looking at the two tax rules. Then we'll break down the employee tax trap, followed right after by the corporate tax shield. From there, we'll shift gears into the psychology of the sovereign mindset, and we'll wrap the whole thing up with the architect's strategy. Let's jump right in. All right, part one, the two tax rules. Look, the financial system, it's not some perfectly flat playing field. It's actually designed with two completely different rule books. And which rule book applies to you? Well, that depends entirely on how you're legally structured. Robert Kiyosaki hit the nail on the head when he said, there are two sets of tax laws in the world, one for the poor and middle class and one for the rich. Now, to be crystal clear, this is not about evasion, okay? This is about comprehension. It's about knowing exactly which rule book you're currently reading from.
So, we see a really stark contrast in mindsets here. On the left side, you've got the amateur. The amateur essentially plays the victim. They complain about taxes, they view them as this inevitable, heavy punishment, and they just feel totally helpless. But then, on the right side, we have the architect. Now, the architect, they don't complain. They study the rules of the game. They follow the law perfectly. But, and this is key, they optimize every single sentence within it to build an absolute legal fortress around their wealth. Our whole goal today is to transition you out of that amateur mindset and into the architect.
Which brings us to part two, the employee tax trap.
To truly understand how to build your shield, we first need to confront the pretty brutal chronology of the standard W-2 employee system. It goes like this. Step 1, you earn your money. Step 2, the government taxes you immediately, right at the source. And step 3, you try to spend whatever is left over. You see how this system unfairly drains your wealth right off the top? It taxes you on your gross revenue. Literally, before you even see your paycheck, before you can pay your rent, buy groceries, or invest a single dime, the money is just gone. You're left functioning entirely on the leftovers. Now, let's look at the alternative. Part 3, the corporate tax shield. We are about to completely flip the script. The corporate cycle is not some sketchy secret loophole. It's actually the legally intended design of the financial system built to encourage business and investment. Here's how it flows. Step 1, you earn money. Step 2, you spend that money on valid business expenses. And then step 3, the government taxes only the net profit that's left over. This chronological shift, it's literally mind-blowing for the retail investor. You earn, you spend, and then you get taxed. This structural difference is exactly why billionaires can often pay a lower effective tax rate than their own secretaries. They aren't owning things in their personal names, they're owning them through legal entities. So what exactly is this? A tax shield is a legal reduction in taxable income through the use of allowable deductions, depreciation, or corporate structures. And I really want to emphasize the word legal here. When you invest as an unprotected amateur, your stock dividends or crypto gains get hit with direct, heavy personal taxes. But owning a legal entity, that protects your investment capital. It shields it legally and it shields it structurally. To make this super concrete, let's talk about allowable deductions. When you operate through a corporate structure, basic operational costs, like your computer, your internet bill, your workspace, even educational series just like this one, can often be counted as valid business expenses. Think about that for a second. The employee has to buy a computer with after-tax dollars, with their leftovers. The architect buys that exact same computer with pre-tax dollars as a valid operational cost. They are legally lowering their taxable income while they're busy building their empire. It completely changes the game. Moving on to part 4. The sovereign mindset. Now we're shifting from the mechanics over to the psychology. Remember back in day 83 when we talked about ascending to level 3 and level 4 of the wealth ladder? Well, if you want to climb that ladder, you have got to stop thinking like an employee and start thinking like a sovereign entity. Honestly, it's a massive amateur move to build up these huge stock or crypto portfolios only to leave them sitting in fragile personal accounts forever. A sovereign entity doesn't just leave their wealth exposed to the elements. They build a fortress. Unprotected amateurs rely on those fragile personal accounts.
Sovereign entities, on the other hand, consult with professional tax architects. We're talking about certified accountants and lawyers. As your empire grows, you work with these pros to set up holding companies or corporate accounts. Remember day 42 when we talked about dry powder? Well, the sovereign entity uses these exact structures to protect that dry powder from being prematurely drained by the tax system.
Finally, Part 5, the architect's strategy. Okay, it's time to bridge the gap between theory and your actual life. We always want you walking away from these masterclasses with a real, actionable cognitive task. So take a hard look at your current income stream. Ask yourself, how much of it is being taxed before you even see it? Consider this a direct wake-up call. You really have to confront the reality of your current tax drain. Because if you're operating entirely on the employee cycle, you're leaking wealth every single day before you even get out of bed in the morning.
So here is your cognitive task for today. I want you to research the basic requirements for setting up a simple LLC or a limited company in your specific region. Just to be totally clear, we're not telling you to run out and incorporate today, but you absolutely must embed this knowledge into your neurofitness. You need to know exactly how the shield is built in your jurisdiction so that when the time comes, you're 100% ready to act as the architect.
So, I'll leave you with this. Are you ready to stop running your financial life like an unprotected amateur, build the shield, and actually protect your fortress? That is the ultimate question for day 86. Learn the rules, embrace the corporate structure, and shift that mindset. I am so incredibly excited to continue this 365-day journey to financial freedom with you. Get to work on that cognitive task, and we'll see you tomorrow for the next masterclass.